Good morning, everyone. So first of all, welcome to this very first webinar episode of Taurus Insight. We will be focusing today on banking-grade digital asset custody. My name is Victor, and I will be your moderator. And for those who don't know me, I'm taking care of marketing activities and partnership at Taurus. So by the end of this webinar, our objective is really to equip you with tools that will help you to guide your digital asset custody choice. And as we have a lot of bankers in the audience, we will be really focusing on two streams, which are first, technology, and second, regulatory. And to do so, I'm really and extremely pleased to receive such a strong panel of what we will call cross-disciplinary experts. So let's do a quick round of introduction, and I let our guest speaker introduce themselves.
Who should start?
Thank you. Start, Jean-Philippe.
Okay. So hello everyone. Happy to be in this first event of this type. So I'm co-founder and chief security officer at Taurus. So my background is in cryptography and security. So I'm probably the most technical person on the panel, which means I'm clueless about the legal and regulatory aspects. So I've been doing cryptography for the last 15 years. I had a PhD at EPFL in 2009. I've done a lot of public research, as well as work in industry, in pay TV security, and did a lot of consulting for banking and public sector clients. And I've also did a lot of security consulting for major blockchain organizations, which is one of those things that created me to Taurus. Just the difference is that with Taurus, I'm building things instead of just breaking things, which is also fun. So very happy to be in this discussion and looking forward. So I pass the microphone to Fedor, maybe. Unmute.
We can't hear you.
Unmute yourself.
Yeah, the dreaded mute button. So thank you, JP. Thank you, Victor, for having me on this webinar. So my name is Ferdinand Postpriyakov. I'm a partner at Lenz and Staehelin in the banking and regulatory practice, based in Geneva. I'm also heading the fintech desk in our Geneva office, and as part of this, I regularly advise on legal and regulatory aspects of technology, fintech, and in particular, custody solutions for banks, cryptocurrency trading, client documentation, and so forth. I also have another hat, which is that of the Secretary General of the Capital Markets and Technology Association. We'll touch a little bit more on the association later today. So I will introduce the association perhaps a bit later, but it's a Swiss law association, which aims at promoting the use of technology in the capital markets field, and in particular focusing on applications of blockchain technology to capital markets application for the full value chain, from digital assets, transforming securities in digital assets, to custody, to trading, etc.
Thank you, Fedor. Let's continue with Alexandre. Yes.
Yep. Hello, my name is Alexandre Duret. I'm the product director for wealth management at Temenos. For those who don't know Temenos, we're a software vendor focused on banking. So we serve all types of banks around the world. We're probably one of the largest software vendor focused on that specific space. And so compared to the other participants on this call, I sit between technology, regulatory, and legal. And we're quite interested at Temenos in these aspects of crypto assets, because that's the next trend we believe will change the industry. But we'll speak about that.
Thank you, Alexandre. And Emmanuel?
Guess it's my turn. Good afternoon, everyone. I'm Emmanuel Genkon. I'm a partner in banking audit at PricewaterhouseCoopers here in Geneva, handling mostly regulatory matters on the conduct side rather than on the quantitative side, but still also from time to time. So from AML to market abuse, technological questions as well. And as Fedor mentioned, the CMTA, I'm also a member of the advisory board of the CMTA in the AML group.
Thank you, Emmanuel. So for everyone on the line, you can write your questions down on the little menu on the right. So if during the conversation you have any specific items or need any clarifications, feel free to write them down and we will catch up on them. Probably we can even capture them during the conversation. So let's get into it right now. I'm going to start a bit more with technical question. So ultimately, what are the key differentiators or key technical challenges for a bank when they look for digital asset custody solution?
So maybe I can take this one. It's fine for you. Yeah, I don't, Victor, when you mentioned custody, maybe it's worth for our audience to briefly summarize what we're talking about in the context of digital assets. So digital assets, we mean cryptocurrency, we mean digital currencies such as DAM. We also mean tokenized securities, which are going to happen, not happening now. So when we talk about custody, it means, well, the safekeeping, the secure safekeeping of these assets. And in the blockchain world, when we mean safekeeping of an asset, so if you have 2 Bitcoins, you don't have twice as many things or items, you have only a cryptographic key or an equivalent representation of the key that will allow you to spend these Bitcoin or to sign checks, to send virtual checks to spend this money. So ultimately, custody is about storing cryptographic keys securely, but not only. It's also about using these keys, these assets, in a way that prevents unauthorized transactions, that provides smooth user experience, and that minimizes the operational risk, and also that integrates in the environment of the users. So maybe this calls for some differentiators as you asked the question. So from my technical perspective, the first one is whether you do self-custody or sub-custody. So self-custody, you manage everything yourself. Whether you have a supplier of technology, but then you run the technology yourself, which is the first way to do it and what we see the most commonly among banks in Switzerland. And the second one is what we call sub-custody, where a third party, another party is technically the custodian. And there's also a hybrid scheme whereby you use things like multi-party computation to have shared control, shared custody, but that's a bit technical. And maybe from our perspective, what we see, why we see our users choosing self-custody is that at the end of the day, it's easier integration cycles. It's also lower counterparty risk, potentially also better margins. So it has a bunch of advantages, but sub-custody is of course also an option for some use cases. The other differentiators, without elaborating too much, the first one is which kind of underlying technology you're going to use. Do you use trusted hardware components such as hardware security models for really storing the keys? Or are you going to use something without hardware, but by distributing the trust using software technology such as MPC, multi-party computation? So I could talk for hours about this, but I won't. And then maybe the last differentiator that we see, and that's particularly relevant these days, because like 2 years ago, everything was on-premise. The rule was everything on-prem in your own infrastructure, your own data centers. What we've seen evolving from customers is the demand from some hybrid settings where it's not fully software as a service, it's not fully SaaS, but you may have a hybrid system whereby, for example, the customer may not want to manage the hardware modules themselves, but they want the supplier to do it on their behalf. Nonetheless, they would keep full control of the keys, full control of the technical compartments storing the keys, but the tangible object might be managed by another company. And last but not least, the differentiator in terms of custody, when you store money, is this trade-off in terms of assurance and latency. Is it hot storage or cold storage? Where hot is you have access directly, it's online. Cold is air-gapped, you need manual operations, and some things in the middle, what we call warm storage, potentially, which is online, but you nonetheless need to perform some manual operations to make the transactions happen. So, yeah, happy to leave other participants share their perspective on this.
No, exactly. And to guide for the other participant, what about, because I guess it's much more and it goes much beyond security when we talk about custody. So there is a compliance, there is risk management. So would you like to elaborate a bit on those aspects also? What a bank should look into when it comes to risk management?
Maybe my co-panelists have answer to this. Otherwise, I'm happy to share my views. Well, I can start, but yeah, you mentioned it's more than security. Security is important, but also I think ultimately when you talk about security, it's not a state, it's not a secure and insecure. It's about shared responsibilities with the user, with the clients. So it's how you integrate in the ecosystem, in the IT environment of a customer. So what functionality, what, let's say, interfaces you offer. So for example, Temenos, many banks use Temenos, and if you provide custody technology for crypto assets, oftentimes customer will ask you, oh, are you compatible with Temenos technology? So you have to offer a way to work with the established technical stack in a way that doesn't jeopardize the security of the system.
So, and just one last point on the technology part, and then I think we can move more to the product side. You were just referring to the technology stack. What do you mean by that?
Well, it's all the family of components from the software that you run on your endpoint device to the software that runs in your cloud applications, to all the banking middleware that you're going to use, the software that performs all the pure, business logic operations. And in the context of crypto assets, on top of this, you also have to rely on software specific to blockchain. For example, the very low-level components that will issue the signatures, that will sign the checks, so to speak. And on the other end of the workflow, the software that is not under your control, but that validators of the network will use to verify your transactions. So that's a whole ecosystem of software components that need to play together to make things happen.
Yeah, I think if I may add, JP, or more from a regulatory or legal perspective, when we speak about custody, I think sometimes there are misunderstandings in terms of what we mean. Obviously, it covers both the infrastructure components, so hardware, it covers software components, and it obviously covers the legal regulatory model that will be selected in terms of what is the service provided to whom, who controls the private key in the legal sense, and which is not necessarily aligned 100% with the technological sense in certain situations. And so you have to have a holistic view on this before you say, oh, this is custody, because infrastructure provider that only provides a managed hosted HSM but never touches the private keys, yes, provides a custody infrastructure, but doesn't provide, in the regulatory sense, any custody service. So this needs to be taken into account, because if you provide a custody service from a regulatory or legal perspective, then, and Emmanuel and I will talk about that a little bit later, it triggers certain requirements in terms of ML, licensing, risk management compliance requirements that will be kicked in depending on the custody model in the wider sense that's selected here.
Let me just clarify your point. Someone is asking the question, what is an HSM? Maybe I did not mention it. It's a hardware security model. So it's a type of device, a kind of computer in a box, so to speak, that will be used to store component security, to perform some operations in an isolated environment.
Okay. So we continue. Let's continue to get a bit more perspective also from Alexandre's side. When it comes to, let's say, let's go from a product perspective. And I know that, let's say that Temenos is really, has been a founding member of the CMTA since inception. You are the largest core banking provider in the world. So how ultimately do you see Temenos from a how do the company see the digital asset from a product perspective?
Well, we're obviously very interested because anything that's new, also anything that's tied to regulation is very interesting for us. If I can be very honest, for now, I think the market would see this, or our clients would see this as futuristic a little bit, or in terms of technology, a little bit bleeding edge rather than just leading edge. So we need to reassure people that the technology is there, and that's why we have companies such as yourself, such as Taurus. And I think also it will be important, the second part of this webcast, to discuss about the regulations and the legal side of things, because without this foundation, it will be very difficult to make any progress. But there's two sides to it. First of all, there's cryptocurrencies, and they're here already, and that's a given. We see some interest there, so I'm focusing on wealth management within Temenos, but that extends into retail or execution only. I think that's well understood. We see more and more interest, especially in this crazy market where basically there's so much liquidity and you don't know where to invest it. So in the end, why not Bitcoin? And also it's useful in terms of diversification. So some of our clients are looking into that. And also just because there's demand from the market, from some clients. So that's something we need to provide as the core banking provider. And then maybe we'll touch upon it a bit later, but the other side to it is securities tokenization, which is in a way the same technology, but quite a different business case. But so to summarize that, it's from the perspective of the market, or the market that we serve, it's still it's very new. It reminds me of the cloud. If you like, I think also Jean-Philippe alluded to make the same kind of comparison. The cloud a few years ago, everybody was looking at it very cautiously, and now it's a no-brainer. It's not to say that every bank, every one of the wealth management firms or banks would go to the cloud immediately, but every questionnaire we receive has a mention about the cloud, and probably I see this whole digital assets, blockchain technology as the next evolution of that. So for the time being, it's early. People are looking at it with caution. There are some early adopters, mostly small structures, fintechs, but also some big ones. There's some examples on the market. There's I think Deutsche Börse has a blockchain platform for securities lending. So it's coming. It's early, but it's coming.
And so I like your analogy with the cloud, because it's true that it took quite a bit of time for the cloud to be adopted, and now actually we see everyone. It's like a must for everyone. So I think this is quite relevant. You were talking about crypto assets, and so obviously, yes, they are here. Have you seen some demand from some of your clients from the banks for those digital currencies and tokenized securities, even again, if I know everything is quite early?
It is yes, it is early. It depends on the type of institution. So again, if you're thinking the more types of brokerage or execution only, then some of these banks would see Bitcoin or trading on Ether or things like that as yet another type of assets that they can offer to their clients. But for tokenized securities, it's potentially something more deep in terms of impact, because there's the potential to change the way the whole securities value chain. So today we're very accustomed in our business that, okay, settlement is T+2. Why is it T+2? Why not now? I mean, we have the technology to do it now. So these types of things will take more time, because Bitcoin, for instance, that's public blockchain, it's fully shared. I think for tokenized securities and other types of crypto assets, we'll be talking more, I suppose, about private blockchains, things which need to be heavily regulated as they are today. So for me, I think it's more a switch of technology, but still with a lot of regulation behind. Otherwise, it's not going to work. I think there will be a little adoption.
So as you're talking about regulation, I think I can hand it over a bit to Emmanuel. So can you tell us a bit what the regulators like FINMA will be requiring, and what are they looking at when it comes to technology and target operating model?
Well, I guess that at this stage they have been rather open in terms of technological requirements, and they were learning as well. We see a lot of institutions discovering digital assets on the one hand and the technology that goes with it, and it was pretty much the same at the regulator. There were some legal questions that had to be answered, and this is now mostly addressed with the new blockchain law and with the second wave of entering into force. We will have more clarity, but they were initially focused on pure security matters, but then also on the regulatory handling of the or treatment of those assets. Typically, the question as to whether it should be booked on or off balance sheet, and that had to do with the legal qualification of those assets. They were looking at the regulatory classifications in terms of product, in terms of investor protection requirements, and so on and so forth. And I don't think that beyond the pure security issues, they were not really looking very deep into the technological solutions. And typically, when we had discussions with them in the past regarding requirements for internal ledgers and so on, they were rather open and hadn't really yet made their mind. They will need to set some rules. It's not envisaged at this stage that there will be anything in the ordinance regarding the Blockchain Act, but those are typically extremely important questions, because that comments a lot of other things, typically whether it's on or off balance sheet, whether it's segregated in case of bankruptcy, and typically the law just say, well, if it is possible to allocate it to individual clients, pooling is acceptable and assets can be segregated. But what is the concept of being in a position to allocate it to the various clients in case of pooling? And there is no standard at this stage, and that will need to be developed. Is it completely integrated in the core banking system? And that's where it's important also to see how things connect in terms of custody and core banking system, and to ensure that at the end of the day, we're handling and treating this the same way as we do with monies, fiat monies or securities, depending on what we're talking about.
This is, can I interject here? This is for us a big question. Exactly that. And I guess for all the banks, you have a core banking system, and in a core banking system, you have currencies and you have securities, or maybe you have also commodities. And suddenly you have this new type of assets which could fit the three categories. So how do you manage that with the very important impact of, yes, is it going to be on balance sheet or off balance sheet? If you banks would prefer to have it off balance sheet, treat it as a security for obvious reasons. But at the same time, if it's something like Bitcoin, which can be used as a payment instrument, then it's more like a currency. So we need to have the tooling, the products, the accounting needs to be flexible enough to adapt to these different situations.
And
but perhaps if I may add one thing on what Alexandre said before. Now there is more demand, of course, and I see there are two kinds of demands on the banking side. You have those banks that are kind of pushed by their clients to provide services regarding what is currently existing, i.e. cryptocurrencies, and so they do try to allow trading and custody of typically Bitcoin or other of the major currencies. But what I see now, it's more and more people who are realizing that the technology is here and here to stay, as we said, for cloud. Despite the fact there might not be much demand on the client side regarding cryptocurrencies at this stage, they want to start offering this because they want to get a foot in the technology and to start mastering the technology and see how it works to be ready when we will be custodying and trading more products than just the cryptocurrencies.
I think you're making a very good point, and I think this goes back to what JP was saying in the beginning, saying that mastering the full technology stack is critical to make sure that we can cover the need and to be somehow future-proof and be able to capture every single opportunities that is coming from each time there is a piece of regulation being unlocked. Because regulation still does a lot of progress. The framework is getting clearer and clearer. I think that just one extra question to the banks that are willing to enter the space, so really the new entrants. Can you please elaborate on what they should look in terms of compliance, suitability, and risk management really beyond technology?
Well, I would say that beyond technology, basically, they should look at the whole set of various regulations, because as Alexandre mentioned before, those tokenized or tokens can be either cash equivalent or can be qualified as securities or other kind of utility tokens. So whatever you want to do, you need to assess what you're going to implement from the whole set of regulations regarding investor protections, whether there is a need for a prospectus, whether there is warning to be provided to clients and so on. You need to look at the AML side. You need to look beyond the pure technological side, but as mentioned also before, what are the solutions that you can rely on? Is it sub-custody? Is it in using custody tools provided by a third party, but you are the real custodian? This all has an impact, and whatever you do with sub-custodians and so on, you need to then do a due diligence on counterparties. That's regulation as well. You need to do due diligence on service providers in terms of outsourcing. That's regulation again. So basically, except if you really want to look at it from a very narrow angle and say, well, we just go into the custody of Bitcoin or another cryptocurrency or some cryptocurrencies, you need to look at the full set of regulation applicable upon a financial services institution.
Yeah, I mean, I fully agree with you. I think one perhaps comment that I can add is that the starting point is to take the business model that the bank wants to implement. It will be illusory, I think, and probably unwise to try to do everything from day one, simply because it will cover too many areas, and from technology to core banking system to integrating all the processes, and start step by step. Because you'll have to review organizational regulations, policies and procedures. You need to have qualified staff, controls, ensure that if you use providers that it's documented, that you can understand, instruct them, monitor them, and have the whole framework of control around that in place. And then think about what services to be offered to the client so that it fits in the run the bank processes, and it's tied with the legal documentation vis-a-vis client, risk disclosure, internal risk management, etc. And AML compliance for cryptocurrency is not as easy as just on paper. You need to have people who know how it works, who understand technology, and obviously things can be outsourced, but then you need to select the provider, etc.
Well, there's
you still need to understand, but you say yes, step by step. That's very important, not to try to implement everything at the same time in terms of, in light of the challenges. But at the end, I still believe you need to know where you want to end up at the end of the road, because the technological choices you may do at the very beginning are conditioning what you will be able to do at a later stage. So if you are clear that you just want to go one step and have no plan to go beyond, then that's fine. But I think otherwise you still clearly need to have a roadmap and to ensure that whatever you do in step 1, 2, and 3 still will be a valid choice for step 7 or 8.
I really like what you're saying that the choice that we are making really today from a technology point of view will really impact the future. And let's say that from my understanding, based on what you're saying, what matters the most is making sure that you protect flexibility and you have the end vision to make sure that ultimately across the journey, you have the possibility to unlock step by step the different capabilities.
Capacity to build on what you have already implemented.
Okay. And JP, let's say also coming back and building on this point, many times I was hearing that mastering the full technology stack is critical according to some clients. Can you elaborate a bit why further?
Yeah, maybe first I would confirm was what Emmanuel was saying in terms of regulatory compliance and not jeopardizing your future by making short-term decisions. What we've seen to be highly valuable and what we've had and what we still have a lot of demand for and a lot of interest from customers is really to have these tools, these features that assist the customers in implementing, in enforcing their procedures related to regulatory compliance. So one case is, of course, the AML compliance, where you have some tools, you have some services that provide you with some analysis of the value of the risk associated to an address, which is the kind of thing we integrate, and also in terms of governance, in terms of controls, in terms of transactions. We've heard a lot what customers had to say and try to provide them with the tools to directly map the internal processes into the application. And also a last point you mentioned, we need the technology to be able to support different models. And one such technical choice that, for example, Fedor knows very well is what is your pooling model? So how do you store your crypto assets? How do you allocate addresses? Do you allocate one address to one of your clients, or do you have one single address for everyone in an internal ledger? And in terms of on balance sheet, off balance sheet, I think this has an important impact. Maybe I can answer your question too.
No, let's say that what I believe the magic is at Taurus, and again, I'm really seeing this, is that what we're able to do is that we manage software, DevOps, hardware, cryptography, to ultimately being able to unlock any digital asset opportunity.
Yeah,
and
I
think this is really critical, because as per what Emmanuel was saying, Alexandre and even Fedor, is that being future-proof, being able to execute fast, and reducing as much as you can the risk of disruption is where the magic happens, I believe. And again, the core belief is making sure we unify somehow a bit regulatory and technology under the same envelope.
Yeah. And maybe to be the devil's advocate here, because I've done a lot of security audit, and many security people will tell you that everything's broken to some extent. I was initially, to be honest, quite skeptical when I was seeing, banks or initiatives related to the tokenization of real assets. I was like, okay, oh my God, what if something goes wrong again in Ethereum, or what if the smart contract is broken? I'm quite happy to see that on the one hand, reality kind of proved me wrong to some extent, not completely. There are still a lot of risks. But on the other hand, my understanding of the regulatory framework and of the new blockchain law really takes this risk into consideration, and has guards and controls to prevent the risk associated to a hack of the blockchain and, for example, of a fork or other unexpected events.
In terms of security, yeah, I see Victor is answering some questions on the chat about AML, anti-money laundering. Yeah, the problem with something like Bitcoin is it's impossible to track where the money is coming from, or it's quite difficult. So it makes things a bit scary for very traditional banks. But it's also a matter of how you want to. It's a matter of business case and how you want to manage it, because you can take some shortcuts. You can forbid your clients to transfer assets into your bank. They need to crypto assets. You can say also, you're going to buy crypto assets within the bank based on the wallet that I opened for you. I'm not going to I'm not going to onboard any of your crypto assets. So I'm not bothered with making sure of the origin of where that's coming from. So there's also some ways to get organized and to manage those crypto assets so that you minimize the risks, at least for AML.
No, I think this is very helpful. Continuing a bit further on the different topic and coming back a bit to the regulation path. Let's say that some of our guests are actually really working with a CMTA. So could you please share a bit of perspective on what is a CMTA for everyone, and how the CMTA will help actually defining and shaping the Swiss digital asset universe, and probably even beyond Switzerland?
I'll take that one. How long do I have? Because I think we can talk about that for hours. But in short, just to again present the CMTA. So it's the Capital Markets and Technology Association. The founding members are our firm, Lenz, Temenos, and Swissquote, with the associated participation of the EPFL, so the Polytechnical School in Lausanne. And now we have like 35 members. Most of them institutional banks, etc., and legal firms, compliance firms, technology providers, etc., like Taurus. the premise and the idea behind CMTA was that the use of technology can actually shape or reshape and assist in the capital markets. So the CMTA is not looking at cryptocurrencies per se for what they are. It can be an ancillary sort of leg of the cash leg of a transaction. We were looking at essentially tokenizing securities and enabling real capital markets transactions. And with that in mind, we started by models to approach the various challenges. I think the first challenge at the time when the CMTA was founded in 18 was the premise that everything crypto is a problem from an AML perspective, which simply is not true. It's just that you need to have a good risk and compliance framework, and you need to talk to your auditors like Emmanuel in advance before you do something wrong, just to plan ahead. And the first project was to issue AML standards, like a set of recommendations to both ICO issuers or other issuers of crypto assets and banks for onboarding clients who either want to transfer crypto assets to the bank or whose source of wealth derives from crypto assets, mining, etc. And I think that was a good first start to lay the land and say, well, there are things you have to comply with. It's not no man's land. It's covered under current regulations. You can do it. It's feasible, and we can sort of recommend standards. That was step one. Step two was to tackle the premise that before the new DLT law, which actually resolved the issue now for good, the premise that you could not incorporate securities into tokens because of the belief that if it wasn't incorporated in physical form, you needed a written assignment to transfer that. And what we did at the CMTA is that we took the problem from the other end, not saying it's impossible and trying to say you need to revise the law, but actually trying to find a legal solution and seek legal opinions that buttress the fact that it's feasible under previous law. And so we devised a tokenization blueprint, which is a tokenization framework for tokenizing securities, obtained legal opinions from highly regarded legal scholars to confirm that it actually works. And I think it's a good result, which in fact incidentally was recognized in the Federal Council report that referred to sort of the theory behind that and recognized that it could actually work, but without a court precedent, it's sort of difficult to confirm. And that was the second step, which had two components. One was legal and regulatory, and the second was technological, and JP comment after on the technological comment. And then the next step was to tackle the next sequence sort of or step in the value chain. So we tackled the issuance, then we moved to custody. And for custody, well, obviously there are a number of things and a lot of moving parts. But once you know which custody model you have, and then you need to also address the risks and management of security. And the CMTA issued the Digital Asset Custody Standard, short DACS, which was issued 1 year ago now, and that describes possible custody models and what requirements and recommendations for a possible compliance path. That's a recommendation to users to adopt that. I think the next step is trading, and well, we didn't issue standards at the CMTA, but we ran a dry run last year where we took a real company, CMTA Labs. You can check on the commercial register. It exists. The company tokenized securities. Actually, so some securities were sold to a number of banks participating in the dry run, who took delivery of those securities safely and then traded amongst them, either directly OTC with a settlement, etc., or in an OTF, so organized trading facility. That was the Swiss quotes OTF, and they did a number of trades. Actually, so technically it's public. You can, there were real trades on the real network. You can check the transactions and reconcile. So that tackles the sort of the trading bit. and essentially covers practically the full value chain. So now, if you look at the new law, where we now have formal ledger-based securities embedded in law, and once the trading and other requirements for custody, segregation, and bankruptcy will enter in force, presumably early August, we'll have a complete set. And essentially, there is nothing that will prevent issuers to use and leverage the blockchain smart contracts to automate securities like debts, derivatives, and other things, to sort of move the back office functions partly on chain and automate them in a transparent and auditable manner that minimizes the risk of errors. And the only thing that will be sort of required is issuers actually willing to go the full way. And that's where the role of the CMTA and the vision for the future is to build standards, to work with the main actors in this field, banks, issuers, technology companies, to define standards, so that a user that comes into this field doesn't have to reinvent the wheel. They can take a CMTA 20 standard, tokenized securities, and that will work with their custodian, who will recognize what it is, that will work with the regulator, etc. So that settlement will be a breeze, and they can sort of list that on an OTF issued by, run by Swissquote or another bank. And that's the vision. I think, JP, maybe you want to comment on the CMTA 20 initiative and the technological part of the standard setting work that the committees are doing, and you are leading obviously the technology committee.
Yeah, thank you for that great summary. You mentioned the DAX as well, the digital asset custody. A few words on this first, which this project was based on the observation, the realization we had, and many parties had, that when we received questionnaires, be it from auditors or customers or RFPs, we're really feeling they were asking the wrong questions, and that it would lead ultimately to a bad view, a bad management of risk. So we tried to seek input from all the key players and try to gather what we all believe would be a good set of requirements, a good set of questions to ask to suppliers, be it from a client, from a regulator, from an auditor, to kind of assess the level of risk. So try to give some set of requirements and recommendations. And if you're listening to this, then you can search for it online and look at it. And if you have feedback, if you have criticism, then we'd be very happy to hear it, especially if you think that things do not make sense today. Very happy to get this feedback. And then, yeah, to follow on the other projects, so as president, or what is the title, technical committee, I'm very proud and happy to lead an effort that involves, again, all the key players from the ecosystem in Switzerland. I'm not going to name them all, but I've seen many of them in the audience. And here the goal is to start from the legal assessment, the legal opinion that states the requirements, the criteria for a smart contract to be useful, to be usable to tokenize securities, and translate this into an actual smart contract. So we've done a first step last year or 2 years ago, when we created the first Ethereum smart contract for the CMTA 20, which was this share token, this equity token. And now we are going one step further. So after having this simple token that was an extension of ERC20, allow you to transfer tokens, now we want to do something that is really more production ready, with an extensive set of deployment guidelines and testing and so on, and also many more capabilities, for example, the distribution of dividends and potentially other corporate actions. And in addition to tokenizing equity, we also want to have a token capable of tokenizing debt securities. So this is an ongoing work. Very happy with the commitment of people. And a last step, it's not a token that will be specific to Ethereum. We'll have a version for Ethereum, but we'll also have a version for the Tezos platform, the Tezos blockchain platform. And the goal is to have a general framework that can be implemented on any blockchain, so as to be as adopted as possible. So very excited about this project.
I can see that for both of you. So if I just recap, securities on the blockchain and tokenized assets are really here. Framework is being defined, and there is a new batch of law coming in very, very soon. So those tokenized assets on different protocol is really, really the next wave of what we could be seeing accelerating in the digital asset space. So just to go back a bit also to Alexandre, let's say that we were thinking, what are you doing to help some of your more, because I think that Temenos has more than 3,000 banking clients. So what are you doing to help those clients to enter safely in the space without disclosing any public information or confidential information?
Well, we're not the crypto specialists. Taurus is, among others. So our plan is we're not going to reinvent the wheel. We're just going to work with companies such as yourselves to make sure that we can easily integrate. So we spoke about the core banking, but there's also a portfolio management system. There's digital banking. There's AML systems and so on. All of that need to integrate with the crypto custody platforms, the crypto trading platforms, the crypto issuing platforms. So that's the kind of things we're looking into now to make sure that we can properly to have almost out of the box integration. But behind the scenes, there's still the other things we mentioned. Is it on balance sheet, off balance sheet? There's believe me, tons of issues that we must fix before so that it becomes easy for the banks. Simple things like, again, on Ethereum, the precision is 16 digits. 16, that's quite a lot for a core bank or any type of system. So we need to adapt a number of things. Or again, if it's used as a currency, well, today we have ISO codes for currency, but Bitcoins, Ethereum, etc., it's not ISO code. It's completely different. So it doesn't fit within the usual boxes. So need to change a lot of things to make sure that it integrates as seamlessly, I might say, with Taurus Protect, and so that for wealth management firms and private banks, it becomes at least from a technology perspective, it becomes easy to start investing into crypto assets.
Thanks.
Perhaps if I may just add one thing that might also help certain banks in this, not necessarily in cryptocurrencies, but in ledger-based securities. So the new form that can be of tokenized securities, and whatever can be issued as a ledger-based security under Swiss law now. There is now a provision which essentially allows any qualified custodian, such as a bank or securities firm, to take them on, and when they credit them to the custody accounts of their customers, it becomes an intermediated security, Bucheffekten. And every bank knows what to do with those. So it's sort of a bridge between taking those on board, immobilizing them at the level of the qualified custodian, and then just crediting the client accounts like you would with any normal intermediated security. You get an ISIN code, and that's it. Also, from a legal perspective, predictability, etc., transactions, at least within that custodian, it's something that is already known by the banks and can fit into the normal processes. You obviously need to deal with how you take them on, but it's a smaller issue than having, as Alexandre mentioned, to fit each asset into the right box, because it's just effect.
No, I think again that's quite good explanation. So we are getting closer to the end. As a bit of closing question, and I will probably start with Emmanuel. From a strategic point of view, so Switzerland has been somehow really at the forefront of financial regulation. And what do you think the Swiss Financial Center could do to really keep up and maintain this leadership position?
Well, It's a good question. I think so far we have been at the forefront on two aspects. First is that a lot of the technology was developed here, and there were activities, there was market here. On the other end, we had authorities that were quite fast or unusually fast in addressing the issue. And if you look at the timeline of the Blockchain Act, that was extremely fast by Swiss standards, whilst this was only something that was required by the industry. There was no push from a supranational regulator or anything like this. And if you look at the time it takes to address recommendations made by the FATF or the way we addressed demands by the industry, that was quite extraordinary. And I think what we need to continue now is to remain at the forefront of technology, because at the end of the day, this is what drives this business, is to master the technology. Whether the issuers are Swiss or not, it doesn't matter at the end of the day. We're talking about global markets anyway. But what we need to maintain is this technological advance, and to ensure that now we have a legal framework around it. It will need there will be evolutions and so on. We know that those kind of evolutions are not always that fast, and I think it's extremely important that the industry continues to try to self-regulate, to establish market standards and so on, because that helps regulators and authorities or the legislator when they need to carve things into marble. But that also ensure an efficient market at the end of the day. And if there is no rules provided by the state, then at least the market provides its own or decide on its own rules. And if we can show that the market is working, then we will continue to keep that edge, I guess.
That's perfect. I have 3 minutes left. Let's try to look a bit at the questions remaining. So there is a question regarding what are the main challenges for implementing crypto assets into a core banking system. So I guess
I think I gave a few examples of that already.
I think so too. So all in all, just trying to wrap up the conversation of today. First, I'd like to thank you everyone for joining this webinar. I think that was very, very helpful to get your perspective, cross-disciplinary perspective, both from legal, technologic, and also product on digital asset space. I love the fact that we are getting clearer and clearer on what digital asset means, meaning we really have 3 components, which are the crypto assets, which are here today. There is the tokenized securities, which are the future of tomorrow, and the digital currencies that we are seeing that starts to appear and that are coming, we believe quite soon with DM coming in. So I think that we are very, very optimistic regarding the future of the space. And then again, thank you very much everyone for coming. Thank you, Fedor. Thank you, JP. Thank you, Emmanuel. Thank you, Alexandre. And if you have any questions, so obviously feel free to reach out to us. We'll be more than happy to answer and address all of them. And I think that's it for the first episode of Taurus Insights webinar.
Thank you, everyone. Victor.
Thank you, everyone.
Thank you.
Thank you all the participants as well.
Thank you, and have a good evening.
Yeah.
Thank you, everyone.
Bye, everyone.
That's it.
Bye-bye.